Hi, my name is Sam Liam. I'm President and CEO of NorthIsle Copper and Gold. We have one of the best, if not the best, and the largest copper gold porphyry in British Columbia that is currently not owned by a major.
Sam, good to see you. We are going to do a little roundup of the year with you today because, so I saw the news and it kind of made me think. You've got the financing in place, you've got the PEA coming up. You kind of ended the end of the year in a really good place. I'm interested in maybe just reminding myself of the journey to get there. So, at the beginning of the year, what shape was the company in?
Maybe we'll step back about 2 years ago, right? Because 2 years ago, we had a very large PEA, defined PEA that defined about a $1.1 billion NPV, a 1.4 CapEx project that saw about 100 million pounds, of copper production a year and 100,000 ounces of gold production a year. So that was our project that we had defined in 2021, which was very big, but it was capital intensive. And so 2 years ago, we went back and started exploring for higher margin rock. So rock that could allow us to phase into the much larger project, very similar to what Artemis Blackwater has been successful in doing over the past 4 years. Phase one, for them it was phase one, phase two, phase three. They broke up a 70,000 ton per day project. So that was our goal. And last year we did discover two main zones, Northwest Expo and Goodspeed. One of which, Northwest Expo, we thought this is really high grade stuff. It's really high margin stuff. Let's put this into a resource because that is going to help us in that activity of defining phase one, lower capital intensity, higher returns. So this year we produced that evidence. We produced that for the market. We released it in March, where we showed that we had 2 to 3 times higher NSR value resources at Northwest Expo. So approximately 70 million tons to 100 million tons indicated plus inferred. At about $55 per ton NSR value rock. So that's 2 to 3 times higher value rock off of at 1150 cutoff. So you can do the math. That is very attractive stuff. The recoveries we've improved dramatically as well, with about 90% recoveries in the gold and 80% in the copper. So that was all put into the resource report that we just filed a few weeks ago. I'm happy for people to go through it in detail. But that really then allows us to contemplate this phased approach where we see a much higher gold dominant phase. So as per the resource report, which has now taken over our PEA that I just described as our one technical report from a disclosure perspective, that phase one, which will include Red Dog and Northwest Expo, is approximately 70% gold and approximately 30% copper. All right, so that's really significant. Gold prices today are obviously around $2,700 plus. Long-term consensus is about $2,150 right now. And to have that distribution and that tonnage and that NSR value margin, all of which you can refer to as part of our resource estimate, is very, very, very impactful, right? And so I think what the market isn't realizing this is that this is now 80% of the way done. We're now prepared to finalize the economic study that we are looking to release early in 2025, so Q1 of 2025. So that's been exceptionally well received. I think what that has done is it has attracted institutional investment into the company. We just closed a $10 million straight equity offering with effectively 2 multi-billion-dollar institutions, one based out of the US, one based out of Canada. These institutions are very supportive of what we're doing. They love our project. They believe that this PEA is going to be the game changer that we can show, in which we can show that higher margin, lower capital intensity project. So just to put that in perspective, we have set out our goals, and we've been very public about it, is that we want to improve the magnitude of the NPV. So the $1.1 billion in our historic PEA, which again, this should not be relied on. It's been taken over by our new resource update that we released a couple of weeks ago. We want to improve significantly on the $1.1 billion. We want to improve on the capital intensity. And the way that we measure capital intensity is through the very simplified NPV to CapEx ratio. So our NPV was $1.1 billion as per the historical PEA, and our CapEx was 1.4. So we want to significantly improve that ratio as well. And then as a result, the IRRs, your internal rate of return, should improve significantly if we achieve those two things. And to put that in perspective, the historical PEA had a 19% after-tax IRR. So all those things are our goals. In a couple of in the next quarter, we will have that in a announced preliminary economic study, and so that's why I think we have now gone into that territory of institutional interest and institutional behavior. So set that aside. What is that money, that $10 million that we've just raised and closed last week? What is that for? Well, that's actually for growth. So what's allowed us to go through this strategy and be successful this year is that higher margin area to the north, so Northwest Expo, Red Dog. Well, the second discovery we made 2 years ago is West Goodspeed. It's only about half a kilometer away from Red Dog. And we have now culminated 16 drill holes, 15 that was announced, 16 that we are about to announce, whereby we have now seen the continuity of this porphyry towards that southeast, towards West Goodspeed. We've already defined an additional 1 kilometer of strike along that, none of which is in the resource estimate. This is at surface. It's more equally distributed copper gold, but the grades starting at surface, as we've announced throughout the year, are approximately 0.55% copper equivalent. So this, again, demonstrates the higher margin rock that we would expect and that would build out that initial phase project, which clearly is something that is very attractive as per our current resources. So that's what the $10 million is, or sorry, $7 million is going for, $3 million of hard is going towards. It's going to expand, it's looking to expand that higher margin phase one beyond what we currently have. So lots of balls in the air, I understand, but it has been an incredible 2024. We're now fully funded for our growth in 2025, and we've built out our shareholder base, as we've always promised to do, at the institutional level, with two major multi-billion-dollar institutions participating in the last offering.
Well, look, you're talking the language that institutions understand and want to hear. You're focused on the bottom line. So I'm not surprised that they're starting to come in now. You're at that point where you become interesting to them. But let's just kind of hone in on some of the things which kind of drive some of the metrics which you're focused in on, such as getting after this kind of this gold component first, this phased approach that you're doing, and what that does for you in terms of the cost of capital to get this thing going, because sometimes that's the big punitive component to startups.
Yeah, that's a very sophisticated question, right? Because this is a gold dominant phase, it's more gold, and we know that the costs of capital for gold projects are actually much lower than base metal projects. So 5% versus 8%. And so what does that do from an economics perspective? Well, that obviously gives you a greater NPV. What does that do from a capital funding perspective? Well, it gives you access to various amounts of capital out there that are much, much, much lower than traditional bank debt, right? So, for example, I think we talked about this in the past, the royalties, the streamers, they'll pay sub 4% cost of capital for projects that are sanctioned to get a piece of that stream, of that gold stream. So that the inherent innate cost of capital for gold is much lower than for copper. So that's step one. Step two is the fact that because of that cost of capital and that ability to expand your margins for gold projects, you can reduce your capital intensity, right? So if you want to put numbers, that what we're thinking of right now is we're looking at a 40,000 tons per day instead of an 80 or 70,000 tons per day project, right? We're looking at doubling our gold production as part of phase one. All of this can be reconciled with the resources. If you look at our resources, our statement, we've got three resources: Northwest Expo, Red Dog, and Hushamu. If you look at Northwest Expo and Red Dog, those are the ones that are going to inform phase one. So the range of NSR value per tons, this is revenue post recoveries, ranges approximately from $33 per ton to $55 per ton, okay, with a cutoff of $11.50. So that's where you can see the potential margin expansion there, right? That is what is approximately 70 to 100 million tons of the initial production. And as you can see, the gold grades are significantly higher. They're about 4 to 5 times higher. We're still in the porphyry, but they were about 4 to 5 times higher than what we see outside in the porphyry, in the potassic zone in the porphyry. So that is what's going to enable us to move a much, much bigger project. We did expand the resources by about 40%. That's another thing that I think people have to understand, is that not only have we put the highest margin project up front, which impacts NPV positively and IRR positively, but we've expanded the entire overall resource, which most of which we're going to use for the PEA, which makes it a much, much larger, longer life mine. So the historical PEA, which again should not be relied on today because it's been taken over by the resource estimate, was 24 years. But we've now expanded that resource significantly, and therefore the life of mine is going to be expanded significantly. It doesn't impact NPV as much because, as we know, the NPV typically is informed by the first 10 years. But what it does is it shows that this is a material project that any intermediate or major company would absolutely be interested in.
Okay, well let's look at that. Like, we pride ourselves at looking at coming back to companies we think are real, that are going to get into production, right? So when I look at this, by the way, great explanation about that. Not too many companies talk about that. If I look at this, I've got to feel that all of the kind of barriers for some of these institutional investors, for some of these industry investors, are going to be removed. So institutionally, you're talking the language. If you think, and you must be thinking about M&A in this space. I mean, there's been some great acquisitions, but more kind of either mergers of equals or existing producers buying existing producers. No new ounces kind of coming through. The risk profile for those guys at the moment is too hot and too heavy for them. Timing wise, how do you think you're setting yourselves up for success for maybe being taken out by an industry player? And what do you need to do? I know you're in a PEA stage, but what do you need to do to persuade them to talk their language and say, look, this is a significantly de-risk project for you to kind of move through the phases?
I know the essence of the question, but I'll attack it in another way here, in saying that I always have said that M&A is an outcome. If we do the right thing at the right time, then the acquisition will be an outcome. This is clearly a large project. I've absolutely determined that this is large enough for anyone to be, including the market, to be interested in. But the problem we had to solve 2 years ago at that time was, how do you actually bridge the larger project to something that's more real today, right? And we had a very, very good precedent out there in Artemis Blackwater, where they initially inherited a 70,000 ton per day project, which was a big project, just like our initial project, and they broke it up into pieces. And that enabled them to raise the initial capital to build phase one, which they are now prepared to be pouring gold in the next couple of weeks, if not imminently, right? And this is a project in British Columbia. It's large. It's a beautiful example of how you can break the bigger piece into little pieces to actually make it more realistic and more attainable, right? And so what has that done? Well, they are, I think, on the top of the list of every single major company's takeout opportunity target list. right? Because they've been able to do that, right? And that's not because they weren't pretenders. They weren't arm wavers. These guys have done it before many times, and they did it again. And that is what inherently made them move from a less than $100 million market cap 4 years ago to over $3.5 billion market cap today, right? So those companies out there that think, oh, they're satisfied being at 10x from 10 cents or $10 million to $100 million and then add on a 50% premium, those are the pretenders, right? Those are the people that do not understand the potential of the project or are not willing to figure out how to break it up in a way that could expand into the larger potential of the project. And so I'm it's been, and we've talked about this before, it's taken us a while, right? And patience is absolutely a virtue in this situation. But we have that patience and that fortitude to methodically do what we know is going to unlock the potential of this project today, even if it's not popular at the time. But we know that it is a means to an end. And it's this progression is the only way, in my opinion, unless we have a completely frothy FOMO environment, which in that environment, anything is going to sell. We're not there. But in a normalized environment, this is the progression that is required in order to get anybody interested. Markets, strategics, cornerstone investors, partners. This is why we've, I think, been very slowly progressing and growing the value to our shareholders.
Okay, and talk to me about, and sorry, this is a slightly strange interview in the sense that I'm staying away from the kind of usual topics because I think that it's all these sort of peripheral things which kind of affect market perception of how you should be valued or could be valued when you get, as you say, the institutional guys starting to come in. Let's take an instant. Let's take a look at political will, right? There are people looking at you now at the beginning of the year weren't. Maybe can you talk about the sorts of conversations you're able to have now versus at the beginning of the year?
Sure. So all of these companies have assets around the world, right? And I actually saw a really interesting report. The top 10 countries that produce copper, for example, Canada doesn't even come close, right? It's all in the areas that you would imagine around the world. But the interesting part of that is there are allyships that are forming in the world, as we're seeing right now in a lot of these conflicts and threats around political rhetoric, where security of metal in different regions is exceedingly important, right? So I'm not saying that there's going to be a massive shift away from Chile or Peru or Africa, some of these major copper producing, that's not going to happen, right? But there is certainly much more of an appetite now to conform back to a developed, historically rich country, socially a strong infrastructure company like Canada, the US, and Australia. Those are the three countries that are very much in focus around pretty much everybody, right? And so where are we in Canada? Well, we're in British Columbia, which historically has been the mecca for copper production in Canada. In fact, it is copper elephant hunting porphyry. It's essentially the major, if not the only district that you can find copper porphyries in Canada. Where we are, so what we are seeing politically in British Columbia now is, and what we have been seeing for the last 4 years and more, is this political will around the governments, provincial, federal, and some First Nation groups to ensure that these assets are being realized for the benefit of all stakeholders and landholders. And so the political rhetoric has really improved, which is why we're seeing companies like obviously Newcrest and Newmont buying Newcrest, and now Newmont focusing on the province. South 32 has now made a reasonable investment into the province. We have always had Teck Cominco as being our beacon and our Canadian critical metals champion, based out of here. We now recently had Hudbay, another major copper mining company, take over Copper Mountain. So they are now fully entrenched in the province. So we are now seeing this migration towards areas that have the political will and the infrastructure and the labor. And so then if you take a look specifically at our project, we have all three. We have consent agreements with our First Nation partners. We have the political will that I just talked about at the provincial and federal level. And we've had over $100 million of infrastructure that was spent for the adjacent Island copper mine that was in production between 1975 to 1995. Right, so that money has already been sunk by the government. That is effectively the incentive that the government had put in 20, 30 years ago to get natural resource extractive industry motivated to move those projects forwards. So that trifecta has put a lens on us, NorthIsle. I'm meeting with the mines minister, the new mines minister, in about an hour. This cabinet has just been formed about 2 weeks ago, and one of the first calls he made was to me and to NorthIsle to have this meeting, because we are one of the priority projects in British Columbia, because we do have that point of intersection of reconciliation, critical metals, and infrastructure.
That's amazing. So this new minister, so you've obviously worked with him. Sorry, how new are we talking about?
Very new. So BC has never had a mines minister. Ontario has had a mines minister for as long as I've been in mining, which is over 25 years. BC has never had one. And so that is a first major step towards being serious about expediting projects that have these 3 points of intersection. Number one. Number two, we need stability in terms of our policies. And the current government has just won yet another majority government, and I would categorize them as a center-left government in British Columbia. And that stability was going to allow us to continue the will and the rhetoric, quite frankly, towards these initiatives that I talk about. However, they won at the edge of their seat, pretty much a majority government by 16 votes. And what was pulling them away from that? It was our right government, the conservative government. So in our area, it has always been an NDP government, which is the center-left government I've talked about. This is the first time in memory in the north end of the island where we have had a conservative government. This is a right government in recent memory, many, many decades. So there is this political shift in Canada and in BC in particular, that is embracing natural resource extractive industries. It's been going on for many, many years now, I'd say a decade now. But now there's action being applied to it, as evidenced by the minister, the appointment of this minister, as evidenced by a number of things that the government is now doing and being pushed to accelerate because the will is there. The will is very strong. So all that to say, as I said, I don't see there being a massive shift away from Chile or away from the DRC or away from some of these major Indonesia copper producing areas. But if you look at where the end product is actually made, the smelting, the refining, right? There is a very significant allyship, segregation of countries that have allied together. And we are becoming we being Canada, US, and Australia, are being much, much, much more focused on, because that other group that doesn't produce a whole lot of copper and critical metals are really trying to scramble to not get absorbed by the bigger group.
Well, I think it's kind of interesting. If I look at the year-on-year production out of Chile, it's unchanged, right? It's unchanged. Codelco's obviously had a few problems at the beginning of the year, but they're back up to where they were. This problem that copper has at the moment, where it's dependent on a few specific jurisdictions, and not a lot of the new development stories are actually coming through. It comes back to the conversation we sort of had earlier tonight, where you're saying if the developers can't put themselves in a position where majors will come in and fund that, will take that risk and fund that into production. What's that going to do for copper prices? And how does that affect your thinking about how you've timed this? Because the gold component, I don't think you could be timing it better. Copper has had an okay-ish year. What are we sitting at 430 today? How do you think the macro for copper pans out for you?
Yeah, so we're seeing that right now, where the bottleneck is actually the concentrate side. So it's the mine production side. So we've got all these smelters that are being built, and there's a ton of excess capacity right now, and China's probably leading that capacity charge, and so they're reducing their smelting capacity. But right now, every ton of copper that's being produced in concentrate is being processed. So right now, the bottleneck has always been, not always, but right now, the bottleneck has been on the production side. That's where we live. We produce concentrates. That is, and not only do we produce concentrates, we would produce the cleanest concentrate with very low arsenic, very low selenium levels, and with a gold byproduct kicker, right? So the companies that have or the projects that have really popped in the last couple of years in terms of their negotiating power around the TCRCs and around the smelting has been the ones that with major byproducts in gold, molybdenum, which we have about 10% of our revenue base is in molybdenum, and others as well. But those are the two major ones: moly and copper as moly and gold as byproducts in these concentrates are gold. Pardon, I couldn't find another word. So that's the near term, right? The long term proposition, everyone believes that there's going to be an insatiable demand for copper for all of the narratives that you talk about: AI, electrification, decarbonization, all of those things that I'm not going to bore everyone with because they've heard it, and it's probably run a good course in terms of the narrative. Now reality is setting in a little bit. That's why we're seeing a lot of the speculation coming down from all-time high levels of over $5 per pound this year down to where we are right now, about $4.20, $4.30, right? So I do think that there's now a natural settling of copper prices, minus the trading of it. But I do think that if you look at long-term analyst consensus pricing, which has now moved to $4.25, so now we're kind of in this, backwardation situation where long-term copper prices, analyst consensus, is actually higher than the current spot prices, which we typically don't see. So now we're seeing the industry taking a lead and saying, copper prices right now are way too low to be sustainable in the long term. So I think that's where we are today. I think the other takeaway I would say is that copper has now become the new economic indicator, right? Oil used to be that economic indicator, and traders would trade on oil, on futures and options immensely, because that would be the economic indicator. So this decarbonization shift that we've seen over the last few years has really put copper into that forefront, I believe, of that trading behavior. And again, that's going to influence volatility, which it has. So all that to say, I don't pay a whole lot of attention to the near term behavior. I do obviously track it. I, like everybody else, believe in that long term proposition, and I think that the market, despite the volatility that we see in the near term, regresses to that mean, and that mean has been very, very rapidly accelerating. So for example, we issued our PEA in 2021. We used a $3.25 copper price. So we only focus on what the analyst consensus is at that time, and that's usually informed by 45 plus 50 analysts averaged together. And that was work that I used to do as a CIBC banker in my day. And for the most part, the industry, the strategics, they rely on that as the market proxy as to what copper prices, what they should be, how they should be looking at their own projects and acquisition opportunities, right? So they believe that is a market proxy, and so they will use that number to influence their decision making moving forward. Okay. So as I said just moments ago, it's now moved from $3.25 copper, as per the CIBC long-term consensus report, to $4.25. Gold has moved from $16.50 in 2021 when we did that PEA to $21.50. Okay, so this is really significant stuff, right? Because as you can see, gold right now is at $2,700, $21.50. So there's a little bit of perhaps skepticism in the longer term proposition of gold. But the near term proposition is clear in terms of trading at all-time highs. On the copper side, as I said, copper long term, the consensus is actually higher rather than the current spot price, which we rarely ever see. So that long-term behavior and belief coming from a consensus group of industry experts believes that the long-term proposition is nowhere near what we're currently seeing today.
It's interesting. Like, okay, I think that's going to cover 2024 for me, and you've sort of found it's been punctuated with these institutional investors coming in. I think that's a real win for you guys. It says that what you've done this year validates what you've done this year. Looking into 2025, just to make sure this story isn't punctured by anything, what are the things you're focused on? Clearly, the PEA and Q1 is a big driver of that, but what else do you know that you've got to address and take care of?
Sure. So the PEA is Q1, and that's the next catalyst. We have a couple of more drill results coming out, but those drill results are really informing our 2025 exploration, which is, again, what this $10 million offering has now funded. And the very clear objective that the market wants us to focus on, and we agree entirely, is to focus on this causative intrusion area at Northwest Expo. So what makes Northwest Expo what it is today, this higher margin rock that we've defined, is this very high grade zone. When I say very high grade, I'm talking about at surface, it's within the porphyry's lithocap, right? And we're seeing grades of about 5 grams per ton. So it's gold equivalent. So this is approximately 2% copper, 3 grams per ton over narrow intervals, but over the entire interval, that's about 2 grams per ton plus over the interval of what the pit shell looks like in terms of the high grade area. So that is coming from somewhere. And we are obviously studying it as we drill. But we believe right now, and we've got a lot of evidence to support this, is that it's been cut off by a down faulted portion towards the southeast. And that down faulted portion towards the southeast, we can see that matching alteration from the top to the bottom of that area. And so that is the area of focus at Northwest Expo. And that in itself, if we could find obviously more of that higher grade tonnage, that is going to be very significant, fully funded. That's why we got the money. The second part of it is Northwest Expo, which is just to the east of Red Dog. So this year we've now done enough drilling to be confident that Red Dog and Northwest Expo are connected. That's really significant because Northwest Expo, I apologize, Red Dog is a breccia that's been broken off from somewhere in the porphyry center, somewhere in the potassic zone, and exists on top of a hill. So there's no strip ratio. It's beautifully placed, but we didn't know where it came from. The drilling we did at West Goodspeed this year, the 16 holes, now is confirmed that that is in the potassic layer at surface. So you very rarely see that potassic zone at surface, but we now are drilling through it from surface because it's tilted in nature. And it's now only about 100 meters away from Red Dog. So if you go to our website, if you see the verified presentation, you'll see hole 16 just plunging down towards Red Dog. That's about 100 meters away. So now we've connected these two, which is extremely significant because we've gone from 3 pods, kind of small pods, to at least 2 of them being connected. And the third one is a question mark, where obviously third one being Northwest Expo. That is the growth potential that we have in that northern corridor. That is why we're so excited. That's why the institutions really have supported that program, because it, as I said, the proof's in our resource estimate. It shows much higher value per ton of rock, and it could obviously continue some really, really exciting grades that we saw this year and last year.
And now with the money to be able to get after it. So,
Correct.
Sam, great run through. End of the year on a high. Look forward to seeing what you do next year. Appreciate your time.
Appreciate that, Matt.